Well, the Colombo Stock Exchange on Monday announced the launch of regulated short selling through stock borrowing and lending. This is a new trading mechanism introduced to the Colombo Stock Exchange. To discuss its implementation and how successful it has been so far, we've invited to our studio's Chief Regulatory Officer of the Colombo Stock Exchange, Renuke Wijayawardhane. A very warm welcome to you.
Well, thank you very much for having me in the very.
I think the regulated short selling on SBL, it's new to us. You've sent us press releases saying the CSE will be introducing a new feature, a new mechanism, and that it was successfully implemented, launched on Monday. Take us through this. What exactly is regulated short selling, and what does it mean to enable lending and borrowing of stocks?
Yes, so I'm sure your viewers are familiar with how people borrow money from banks and financial institutions. This is not about borrowing money. This is about borrowing shares. So obviously there has to be a lender of shares and a borrower of shares. But you do that to facilitate regulated short selling. Now, short selling is actually selling of shares which you don't really own, because you borrow the shares, sell it in the market, but you have an obligation to buy back the shares at a later point and return the shares. So in a nutshell, that's how it works.
So you borrow it from?
From a lender. Any CDS account holder can join this scheme. We don't have restrictions. Anybody can be a borrower of shares. Anyone having certain types of shares. Now, not all listed shares are eligible for this mechanism. Right now, it's based on certain criteria that we have determined based on liquidity. About 30 shares are available. So if a particular person or a CDS account holder has those shares, that person can be a lender.
And what does this mean for an investor or someone who owns stocks that are idle? What does it mean to them?
So this actually provides a mechanism where a person who carries a portfolio who probably doesn't want to trade in the near future, he could lend those shares to a potential borrower and earn a fee-based income during that period. So that's the benefit to the lender, right? And the benefit to the borrower is that you borrow to short sell. You go to the trading system through the broker, you short sell the shares, then you get the sales proceed. But as I said earlier, you have to buy back the shares at a later point and return the shares to the lender. That's how it works. So ideally, from the borrower's perspective, he could capitalize on market price fluctuations. So if he thinks that a particular share is trading at a price which is excessive, he could then borrow and short sell. He gets the sales proceeds, but if his expectations work accordingly, then share price will when the share price falls, he could buy the share and return. So that's how the borrower makes a profit.
But what really is the benefit here?
Benefit to the market is, biggest benefit is, so I explain the benefits to the stakeholders, the lenders and borrowers. The biggest benefit to the market is it enables price discovery on the Colombo Stock Exchange, and also it also enables efficiency, market efficiency, which is a very important factor for any stock exchange. Because market efficiency is how well market prices have incorporated all possible information in an accurate way. Now, I'll just give a small example. So if somebody thinks that a particular share is undervalued, they could obviously buy the share. You could use your money, or you could borrow money from a margin provider or from a broker and buy. If somebody thinks that a particular share is overpriced, if you own the share, you can sell it. But the problem is, if you don't own the share, but you still think that this is overpriced, what are you going to do? Now, earlier, that person didn't have a mechanism. So that person's view was not reflected in the pricing earlier. So now, with SBL and short selling, what it has done is, that person could borrow and short sell, and that enables better price discovery, and that will also enable narrowing of these bid and ask spreads, which is the best buy quotation and best buy sell quotation, best sell quotation. So the gap has to be narrowed. That's how you create liquidity and better price discovery, and effective and ultimately enhance the market microstructure.
Will there be some sort of push to engage more foreign investors in the market with this mechanism?
Yes, they are all eligible for this. They could actually take part. If you are a foreign institutional investor, they could lend the portfolios. If you are a long-term investor, they could do that. Or they could also borrow shares. So it depends on their view. So we want to incorporate all their views in the pricing. That is the efficiency. That's how the price efficiency works. So I'm sure foreign institutional investors can play a major role here.
But there are risks with the implementation of such mechanisms. How would you evaluate those risks, and what are the risks really to market as well?
So common misconception actually about short selling is that a lot of people thought that it might enhance market downfall, especially in a market downfall situation. With short selling, it can aggravate the decline in the prices. So that's a bit of a misconception. So we have introduced this uptick rule. Uptick rule. So how uptick rule works is, if the share prices go down by more than 10%, all incoming short selling orders will be subject to this uptick rule, where the short selling order has to be one tick size above the current market value. So that will keep a bit of a check on the downfalls. And also, if the price has gone down by more than 20%, so no further short selling until the price recovers back to the permitted range. And as I said earlier, not all shares are eligible. So we have selected the most liquid shares which are traded in the market. So hopefully there will be enough liquidity, because borrowers need to go and buy back later, because you can't just short sell and forget about it. You need to go back and buy the share and return to the lender.
It's great news that such new mechanisms are being introduced, because we've been talking about new investment tools to other mechanisms. But at the same time, we know that the CSE and SEC have been conducting awareness programs on the new mechanism. But on a continuing basis, will there be engagements with the stakeholders? And
definitely there will be. In fact, we had a few sessions on on this particular mechanism before the launch with institutional investors, which was a huge success. So we'll do it for the retail investors. In fact, we had done a few sessions online, and through the branches we are continuing to do that. And also we are probably engaging with all these investor segments on a continuous basis.
Right, I think that's all the time we have tonight on First at 9, Ada Derana 24. We've been talking about regulated short selling, the newest feature mechanism introduced by the Colombo Stock Exchange. And we were talking to Chief Regulatory Officer of the Colombo Stock Exchange, Renuke Wijayawardhane. Thank you very much for your time.
You're welcome. My pleasure.